Good afternoon, I'm Bryan Lum, a private client dealer with Phillip Futures. In this episode of Market Watch, I'll be sharing my view on the Singapore market and where I think it's headed. Today, we'll be looking at the MSCI Singapore or SIMSCI futures. This is the most popular futures contract that people use for trading the Singapore market. Let's find out why. This shows the top component stocks of both the STI index and the SIMSCI futures. At a glance, we can tell that the two indices overlap significantly, with both sharing top 4 heavyweights: Singtel, UOB, DBS, and OCBC. With some minor differences, the two indices actually have around an 85% similarity. By putting the STI and SIMSCI side by side on a chart, we can see that the similar portfolios translate into a strong correlation between both indices. Any differences in price movement between the two are hence barely noticeable. To gauge how the Singapore market is doing, let's examine what the market fundamentals have been like first. From the chart tracking tourist arrivals, we can observe a declining trend over recent months. This has had an impact on retail sales, with year-on-year figures coming in lower than expected at 5% compared to the forecast of 5.4%. In the most recent quarterly poll by MAS, we also saw economists revise their growth forecast lower to 2.7% from 2.8% in March. The rising interest rates are also likely to have a dampening effect on consumption and the economy. Bringing up the daily chart of the SIMSCI, we see that the negative sentiment in economic fundamentals has been priced into the market. Over the last month, SIMSCI prices have broken lower from within the midterm uptrend channel. However, despite the recent weakness, the market may not be as bearish as it appears. If we zoom out and take a look at the weekly chart, the bigger picture suggests that the longer-term uptrend is still intact. As long as prices remain above the bottom supporting trend line, I would not be too quick to adopt a bearish view. Going back to the daily chart, we can identify 370 as a level of key support to watch in the near term. This would correspond roughly to the 3300 level on the STI. With both being closely linked, I would keep an eye on the two charts, taking signals from changes in price on either. On the upside, the market may encounter some resistance as it approaches the 386 level. However, technicals aside, market sentiment will likely be influenced by a few key events. At this point, 3 major events weigh on market optimism. The first and most widely covered is the situation in Greece. Should talks continue to drag, the market will likely be reluctant in moves to the upside. The second is the pending US interest rate hike. With the FOMC being transparent so far, most market participants are already expecting a hike within the year. A dramatic market response is hence unlikely. However, there remains some uncertainty in how quickly interest rates will be raised, and this will be the factor driving future market moves. Thirdly, the situation with the MERS virus has yet to be concluded. Should it spread to other countries, Singapore may face a similar slowdown to the one experienced during the SARS outbreak. In conclusion, while the overall market trend is still positive, concerns continue to weigh on the market. The result has been a sideways market so far, and traders will have to watch for uncertainty to resolve if the uptrend is to continue. With this, we have come to the end of this week's edition of Market Watch. For more information on how to trade the SIMSCI, you may approach any representative from Phillip Futures. Please subscribe to us on PhillipCapital YouTube channel and Facebook, and stay tuned for more Market Watch videos. Thank you and have a good week ahead.